How would you like to save up to $80,000 from being taxed in 2024? It's already 2025, tax season is here, but it's still not too late to take full advantage of several great tax deductions for the 2024 tax year. Welcome to the Locum CPA Podcast. My name is Stephen Lee, a certified public accountant specializing in locum medical professionals. All right, it's the first week of February, and you're probably getting ready to file your 2024 business and personal income tax returns. But you want to make sure you don't miss out on any of these great last minute but very significant tax deductions in 2024. And I go over all of them. So you want to stick around to the very end. The first one is a retirement plan contribution that you can make after 2024 has ended, right? After the calendar year has ended. Remember, when you're filing your income taxes, most tax deductions you have to take between January 1 and December 31st. But there are tax deductions that you can take even after that December 31st ends, right? And the new calendar year begins. This very first one is the SEP IRA. That's once again, it's the SEP IRA. And the contribution limits will vary depending on the entity type that you are. Once again, the SEP IRA, the contribution limits will depend on the type of entity you are. And I'm going to go over those. So for some of you locum professionals who are single member LLCs that did not elect S Corp status, so once again, you're only a single member LLC and you're reporting your locum activities on the Schedule C of your Form 1040, then your max contribution for 2024 is either the lesser of 20% of net profit or $69,000. Once again, it's the lesser of the two, $69,000 or 20% of what net profit is. I'm going to go over what that is. So, for example, if your net profit from your single member LLC or PLLC from locum activities is $345,000, you multiply that by 20%, then you can get to $69,000. You can contribute the max to your SEP IRA for 2024. Even though it's 2025, once again, it's retroactive because once again, the SEP IRA is an employer-sponsored or employer contribution. Most employee retirement contributions have to be made by December 31st. But with the SEP IRA, because you're the employee/employer, you can still make this contribution before the tax filing deadline. Once again, net income or net profit is going to be defined as your net income. That's all your revenue, your locum activity, your 1099, minus all your deductible expenses. And then you also want to subtract out self-employment tax. That remaining net base is what you multiply that by 20%, and that will be your max contribution up to $69,000 for 2024. Remember, once again, the contribution deadline is the filing date of the tax return, including extensions. So whether you're filing on April 15th, 2025 or October 15th, 2025, you want to know that you do have ample amount of time to not only save, but also apply some of your 2025 earnings to 2024 and get that deduction. Okay, so you definitely want to make sure you're taking full advantage of the SEP IRA. If you don't have a retirement plan set up, you don't have a solo 401k set up for your locum business. All right, for those of you who are S Corps, which are many of you and most of you, the max contribution here to the SEP IRA is a little bit different. It's going to be the lesser, once again, of $69,000, but $69,000 does not change, right? Whether you're a single member LLC or PLLC or an S corporation. So $69,000 is the cap for 2024. But when you're an S corporation, it's going to, the lesser of it too, the second part is going to be 25% of your salary. Remember, reasonable compensation is a very important topic that we always, we're going to make sure you're talking to your tax professional or reach out to our firm. I'll leave a link to our website in the comment section below. You want to make sure you're taking care of your reasonable compensation early on. But once again, the SEP IRA for S corporations is capped at either $69,000, the lesser, or 25% of your salary, something that you took for payroll, right? So it's going to be the lesser of the two. Okay, that's going to be your max contribution. And once again, all of these contributions that I'm talking about for the SEP IRA, whether you're PLLC, single member, or an S corporation, are tax deductible, right? So what that means is that is tax deferred. So the IRS and your local state won't be taxing that income that you contribute to the SEP IRA in 2024, which is great. So you can save that away, let it accumulate using compound interest so that you can actually utilize it in retirement when your tax rate is lower, right? That's the whole point here. When we're trying to defer income, the rationale to theory here is that when you are actively working and you're earning lots and lots of income, your tax rate is higher, right? Because in the US, the tax rate is progressive, right? So the more income you earn, unfortunately, the more the income tax bracket that you continue to climb up. So the theory is let's not be taxed at the highest rate now. Well, let's be taxed at a lower rate in the future, right? When you are theoretically not working, not having active income, but living off your retirement savings, right? Your SEP IRA, your 401k, 457B, all these things, 403V, all these different retirement savings plans that you've done a meticulous job of saving for retirement, right? And later on, I'm also going to go over a health IRA. You should definitely stick around for that. So once again, the SEP IRA is a great tax savings vehicle that you can still utilize in 2025 and retroactively apply it to your 2024 tax return. So don't forget to utilize the SEP IRA. And if you have questions about this, please reach out. I'll leave my contact information in the information section below. And remember, are you a locum medical professional? If you are, you don't want to miss my top tax tips in regards to starting and operating your locums practice. I'll leave a link to that free ebook in the comment section below, so you don't want to miss that. All right, the second last minute tax deduction you should definitely utilize for 2024 is the traditional IRA. The traditional IRA contribution limit for 2024 is $7,000 for those of you who are under the age of 50. Up to $7,000 once again for those of you under the age of 50. For those who are 50 and above, it's $8,000. So it's $1,000 more than those who are under the age of 50. Remember, the traditional IRA has no income limits for contributing, but your ability to deduct contributions may be reduced or completely eliminated based on your modified AGI or adjusted gross income. So really depending on the amount of income that you earned will possibly limit your traditional IRA deductible contribution. Once again, there's no income limits in contributing to traditional IRA, but getting that tax deduction, that's what we're looking for right now is the tax savings, is really going to be limited by your modified adjusted gross income limit and filing status is what's going to determine what your income limitations will be for a deductible traditional IRA. I'll leave a link in the information section below for that. Just really check, go look on that link, look at what is your filing status, single, married filing jointly, married filing single, head of household, look at that, and then look at what the modified AGI is to see, are you eligible for a deductible traditional IRA contribution? Remember, that contribution deduction can go up to $7,000 or $8,000, as well as there's something called a spousal IRA that even if one of the spouses, one of the household members is not working, but your other spouse is, and you have enough earned income, so active income, not retirement or portfolio income, but earned income, then you can actually contribute on behalf of your spouse up to $14,000 or $16,000, depending on the age, right? 50 or above, into a traditional IRA. But once again, you want to check your modified adjusted gross income based on your filing status for 2024, whether you're single, married filing jointly, married filing separately, or head of household, because it's all going to be different what the limitation will be. You don't want to forget that. All right, the third last minute tax option for 2024 you definitely want to look into to save on taxes is contributions to a health savings account, an HSA. If you've listened to my other video podcasts, you'll know that the HSA is what I call a health IRA, right? Once again, you contribute pre-tax dollars if you are a part of a high deductible health insurance plan. You contribute pre-tax dollars, and that will grow tax-free as long as you utilize it for eligible medical expenses, right? There's HSA eligible medical expenses that you want to utilize the HSA account and the savings that you've accumulated over the years. So you can use the HSA not only for the current medical expenses, but future. I do think about a client that I was just talking to recently, and they're a little bit older. They're a little bit older in their career, I'll say. They're in their mid 50s. And they had a great question about should they also start or contribute to an HSA? Absolutely. No matter how young or how much older you are, an HSA is a great opportunity to save on taxes for the current year. And we know that medical expenses will come up, whether it's routine checkups or larger procedures. We know that medical expenses is a reality for the future. So you want to start saving now, grab those tax savings now by contributing to an HSA and benefit in the future for all those earnings that have been growing tax free. All right. So you want to contribute. So in 2024, what are the contribution limits to the HSA? If you're a single individual or covered by a high deductible health plan just for yourself as a single individual, your contribution limit is $4,150. Once again, it's $4,150 for single. If you're married filing jointly or you're covered, you have a high deductible plan that covers the entire family, then that contribution limit goes up to 8,300, which is basically double. So 8,300 if you have coverage for your entire family under a high deductible medical insurance plan. Remember, the health IRA is a no-brainer. You definitely want to do it. I want to do it. You want to definitely share this knowledge with those who are looking to save on taxes, okay, for 2024. All right, the next couple here are reminders for all you locum professionals, right? As you're gathering all your information to send to your CPA or preparing yourself via TurboTax or H&R Block, wherever you're preparing your taxes, you don't want to miss out on these common locum professional specific expenses that you want to make sure you're taking the deduction for. The home office deduction is the first one I want to remind you of. Remember, there's two methods. There's a simplified method and a regular method. The simplified method is the standard deduction of $5 per square foot up to 300 square feet. So you're capped at 300 square feet. Multiply that by 5, $1,500 deduction right there. So once again, the home office, I definitely want to stress, is it needs to be a dedicated office space or office area. It can't be your living room couch, your coffee table. It can't be a mixed use bedroom. It's got to be a dedicated workspace. So make sure you're following that rule. And there's also the regular method where you take actual expenses such as mortgage interest, insurance, utilities, repairs, and depreciation. This is a lot more complicated deduction, and you want to talk to your CPA about that. Okay, so there's simplified method or regular method. Many times, if you don't want to go through all the hassle, just use the simplified method. $5 times the square footage up to 300 square feet. The next last minute deduction you don't want to forget as a locum professional is travel expenses. Did you use a vehicle, your own personal vehicle, to travel to and from your locum engagements, right? If you did, remember round trip, you want to track that mileage and use the standard mileage rate of 67 cents per mile. It's very generous. Remember the mileage rate, if you're going to apply the standard mileage rate, that covers gas, any maintenance, anything that you've done to your car. So you want to use that. That's actually the easiest and most preferred way because it's not only trackable, but also you don't run into issues with depreciation on the car and things like that. Okay, next is travel expenses related to airfare, lodging, as well as meals, a portion of the meals while you're on assignment. You don't want to forget that your airfare, just say you're going to a locum's engagement, there and back, any kind of round trip travel, the lodging while you're there is deductible, as well as a portion of the meal. Okay, you don't want to miss next week's video on how to travel for free. So make sure you subscribe and hit that notification button because next week's video is going to be all about how to travel for free as a locums professional. All right, the last expense I want to make sure you don't forget, and this one can be significant, is office supplies and equipment. Office supplies, once again, paper, pens, that might be very minimal, but equipment, computers, iPads, new iPhones, right? If you got the 16, 16 Pro, 16 Pro Max, whatever that is, if you got new equipment, your cell phone, software, medical devices, if you purchase medical devices for your locum engagements, you weren't reimbursed for them or someone else didn't pay for them, you want to make sure you're taking that deduction for 2024. Don't forget that, right? Look at all your expenses on the technology side and see what you can apply that you use directly for your locums engagement. So don't forget equipment. Remember, I always stress this with my clients. Every single dollar counts when it comes to tax deductions. So make sure you're looking and you're examining all your expenses that are related directly to your locums engagements for 2024 and looking for opportunities. It's not too late. Even though it's 2025, it's not too late to capitalize and reduce your 2024 taxable income. Thank you so much for listening. If you made it this far through the podcast, I look forward to seeing and talking to you next time. Bye.